Hello, everybody. Welcome to the Ag Commodity Corner Plus podcast. Today is September the 5th, 2025. It's already September, more looking ahead to harvest and to that crop's finish. But does it seem like we are going towards a strong finish, or are there issues showing up? Mo, what's the topic for today's podcast?
Yeah, the topic today is Japan trade deal equals a win for farmers, and plus Black Swan in 2025 yields, plus the start of the 89-year drought cycle for 2026. We'll get into it, but I think the market are going to get shocked in the coming months, so we're going to talk about it today. This is week 25. Let's get into the summary for the week. How did we end? Corn actually ended up 8 cents higher, although we didn't quite close above the highs for the week, but we still closed above the 417 old ceiling. We need to get past that 425 short-term support. The new support now is 414. So as long as we hold above 414, I think we're okay. Soybeans, we did fall below 1030, which is not good. We needed to hold that, but one day doesn't make a trend. The market's very concerned about exports in China, but today we had export numbers come out and 2 daily announcements to unknown. Again, we've talked about this in past podcasts. Unknown, I believe, is China. Come on. Somebody needs to tell me it's China. Nobody believes it's China, but we have about 132 or 152 million bushels bought for new crop to unknown versus last year, 250. So we need a Chinese trade deal. Canola was pressured because of harvest. We're probably between 1 to 10% harvested in Western Canada. But we did get some good news. That was a new low, but we did get some new good news from the Canadian government supporting Canadian prairie canola growers. We'll get into that. We still need to resolve the tariff dispute with China. New lows in wheat, unfortunately, not getting the post-harvest rally just yet, but it's still early in September. Cotton, new lows. Farmers in the south are struggling. We'll get into that as well. Lean hogs are on a bull tear. That wasn't a new high, but that was a strong close for October. But if you look at all the other future contract months into 2026, all contract highs. Live cattle took some profit taking off this week. Milk, a new low, down over a penny this week. S&P 500 actually closed above 6,500. There are now folks talking 7,000 by year end, up 20% in 26 to maybe 77.60. The Fed looking like they're going to cut rates almost guaranteed on September 17th because the jobs data number this morning in the U.S. was weak. Crude oil, not quite a new low for the week, but closing below that long-term channel support at 65 that we've talked about in past podcasts. And then gold hits a new all-time record high. Let's start off with this. This was an old trade deal, probably a framework turned into a trade deal with Japan.
Yep. So the latest and greatest is regarding that trade deal for the U.S. with Japan, and Japan being among the top 3 buyers of corn and soybeans, and also among the biggest buyers of ethanol. They're a big meat, including pork and beef buyer from the U.S. as well. So the latest, as far as the framework is concerned, is that the tariffs applied by the U.S. on Japan would be at 15%, but on the other hand, Japan looks to have committed to investing up to $550 billion in U.S. sectors, and including purchases of ag from the U.S.
This is a big win for the U.S. farmer. I was quite surprised that we signed this because we'll get into it in the next segment, but because the court ruled that Trump reciprocal tariffs were illegal. But, Japan's been a number 2 buyer of U.S. corn, second only to Mexico. They've been buying about 3 to 4 million metric tons a year. This, 8 billion means that they could probably double that. They're not a big soybean buyer, although they've been buying some. Probably ranked number 3 in soybean purchases. And then they were going to buy some more U.S. ethanol. So, it's good news in the face of challenging times for farmers.
Well, as you mentioned, Mo, one of the courts ruled that Trump's reciprocal tariffs were illegal, but the Trump admin is taking the fight over its tariffs to the U.S. Supreme Court this week, asking the judges to rule quickly that the president has the power to impose sweeping trade penalties under federal law. The U.S. government called on the court to reverse that appeals court ruling which said that most of U.S. President Donald Trump's tariffs were an illegal use of an emergency powers law.
Yeah, so this could delay future investments. It just provides more uncertainty again. Have we moved away from worrying about tariffs? Perhaps it could delay trade deals. If you're thinking that maybe you're hopeful like we are, that we're going to get a Chinese trade deal, maybe that gets delayed. Maybe China drags their feet. We'll see. But we're not surprised because really the decision to apply tariffs rests with Congress, and I'm concerned that the Supreme Court is going to agree with that. So if that's the case, then Trump's going to have to go to Plan B.
Going back to one of the main titles for today's podcast, and we've been speaking about this over the last many podcasts, it's that disease pressure that is affecting the crop in the Midwest and especially Iowa. It looks to be that the finish could be much, much smaller than what we expected. As of now, it looks like 60 to 70% of Iowa's corn crop is affected by southern rust. And looks like only 20% of the farms have used fungicide so far. Already those big yield potentials look to be trimming down.
I mean, actually, that's not 20, it's 30%. I actually just talked to an expert in Iowa, Megan Anderson. She's an extension farm agronomist for Iowa State. She works and knows Allison Patterson, who is a professor of plant pathology and microbiology. So what Allison told me is that 60 to 7% of that corn crop is being impacted. In other words, the real estate is, southern rust is covering 67% of the real estate in corn, which doesn't leave much real estate, which was funny, for tar spot. And tar spot can come in late. We saw tar spot in Ontario come in late last year. And if you didn't fungicide, you could see 80, 90 bushel drop. We talked to Fred Bilo from Illinois. He's a doctor of plant physiology. And then also Ken Ferry, he's a crop consultant out of Hayworth, Illinois. And Ken has a lot of clients in Iowa and Illinois, and he says that the farmer's been caught off guard. They've never seen it this severe. So both Megan and Ken Ferry, Megan Anderson, said that in some cases the fungicide application is as high as 50%, but it's between that 30 and 50, no more than 50. And this disease is crushing corn yields in Iowa and southern Minnesota by as much as 20 to 50%. They haven't seen this severe disease leaf issue since 15-16 when we had northern leaf blight. So this is going to impact the final yield, guys. I'm serious. This is bad. Between the Eastern Corn Belt dryness that we've talked about in last week's podcast, and now this update on leaf disease with southern rust and tar spot and anthracnose, we've heard farmers in the Eastern Corn Belt, in that dry Eastern Corn Belt, suggest that both corn and soybean yields are down 25 to 30%. So you add this drought, and we just got an update this week. And Abhinash, what are we thinking?
Well, like you just said, it's not just the disease pressure. That drought and that dry finish is also impacting the crops. So as of the latest, so this week's drought monitor showed that the Midwest drought has expanded to 47.3% of the region from about 9% last month at around the same time. And this reminds us of September 2011 when when drought was at 48.36. And guess what happened the next year? We had the 2012 drought, the drought that we all remember. This, as of now, for 2025, this could be the start of the 89-year drought cycle, which has possibly been delayed by a year or two more.
We introduced the world to the 89-year drought cycle in 2019. You can talk to a lot of our clients who remember that. It's a 6-year cycle. We did not feel that the 89-year drought cycle was going to happen this year. It just did not. We didn't see the setup like we saw in 11, 12. And by the way, the 89-year drought cycle is supposed to be worse than 12. So, the world was wrong. The weather guys were wrong. May, June, July were wet, but all of a sudden August has turned dry. It's going to take a while to figure this one out, but if we don't get the moisture, if it remains dry through the first part of next year, first quarter, remember in 2012, we actually didn't start to get very, very dry till about May. So it's going to take a long time to figure this out, and the markets will not react. In 2012, the markets did not react till July 1st. So this is bullish long term, guys. So if you're looking for a savior, this could happen, but there's no guarantees that this can happen. So we're just very, very concerned that all of a sudden it's turned very dry. And the first half of September is very dry. I know some are calling for maybe a weather forecast in the second half of September, but I'm not sure that's going to help. That could be too late.
And guess what all of that does to the corn chart technically? So the lows seem to be in for corn futures on the December chart. The lows seem to be at 4.14, which is your support, and it needs to hold the current uptrend. The ceiling coming in at 4.3325. So that there, guys, are your levels. Remember that, Mo. I guess you'll be quizzing everyone on that soon.
Well, we asked that last week, and somebody did comment 432, so they came close, but no cigar. So that's your level, and I think there's also a short-term ceiling around 427. So to get above this 425, 427, I think you need the USDA to lower the yield. I don't think they're going to do it next Friday in the September crop report, but they might do it in October. Don't forget to try our program. If you're looking for an entity like ours that can manage every risk on your farm, if you're the decision maker and you're looking to make more money and try to get it right 8-9 times out of 10, that's what we can do for you. So don't hesitate. It's a small cost to make more money. Not only will we try to catch the highs for you, but we'll also try to catch the lows inputs as well.
Let's stick with technicals, but switch over to the energy markets and look at the crude oil chart. So fundamentally, as far as crude oil is concerned, 8 of the OPEC Plus members will consider further raising oil production at a meeting on Sunday as the group seeks to regain market share. OPEC Plus has already reversed its strategy of output cuts since April and has already raised quotas by about 2.5 million barrels per day, which accounts for about 2.4% of global demand.
So you can see here that we're breaking below that long-term channel support we've talked about in past podcasts at $65, and it's moving lower. And we've also talked that long-term crude oil would fall because of the end to the summer driving season, and we're here. And so I think over time here during the fall, late winter, give it time, be patient. We could retest that 55 as supplies overwhelm demand. And if we can get a break below 50 or 45, I mean, to get much below that, you need a black swan. I don't think that's going to happen. But if we get lucky and we get down to that 45 or 50, that's your buying opportunity in crude oil.
The Midwest broadly, talking weather, the Midwest broadly dodged the frost bullet as of now, although some of the farms did get affected, but more of those issues could crop up down the line. The 6 to 10 and 18 to 14 day maps are flipping back to seasonally warm temps after a brisk couple of weeks.
Hey, we got hit in the Northern Plains both in the last 2 nights, and expected again tonight, Friday, Saturday, maybe into Sunday. So the crops were not ready. Those late planted crops were not ready. It's done some damage. Again, I don't think you'll see it in the USDA numbers until probably the final January crop report. So this just adds to the disease issues and the dryness that farmers have experienced in the Midwest.
And guess what is next week? So next week again is WASDE week. So looking at USDA's performance over the last 24 years or so, since 2000, what have they done regarding soybean yields since, when they came to the September WASDE, is that 12 out of the last 24 years, they've reduced yields from what they had reported in August. And on the corn side, 13 times they've cut their yield projections in the September WASDE.
Ash, it's a flip of the coin. It's a 50-50 flip of the coin. It can go either way on you. Look, the numbers have come in high, so the chances are that they're going to come in lower. But remember, the September crop report from USDA is all about ear count and pod count. So record ears, record pods from their plot data, from their fields. Unless their plot data and their fields are showing a lot of dryness and disease, I think they could come in higher. I think the yield could actually come in at 190, and I think the bean yield could come in at 54. In fact, S&P Global this today, late breaking news, was 189.1. Wow. I'm not surprised, and the beans is 53.8, so that's slightly higher than the USDA at 188.8 and 53.6.
Some concern in the U.S. farmland, and some of these images are distressing. Hundreds of farmers from northeast Arkansas gathered to meet with federal officials, voicing deep concerns about mounting financial pressures and the possibility of having to abandon their livelihoods. This is despite the USDA forecasting and suggesting an overall increase in net farm income this year. It looks like the Ag Council in Arkansas warns that without financial support, as many as 1 in 3 farms across the state could shut down by next spring.
Yeah, it's unfortunate. And I think there's talk that Trump may want to provide some relief to these farmers before a lot of payments get approved next year in 2026. So it's unfortunately, we've had lower exports because China and tariffs have weighed. We've got lower prices, down in the 68-cent mark. Typically acres are between 10 to 12 million year over year. We're going to have to, unfortunately, lower acres and lower production to maybe help prices, but it's going to be a tough go for these farmers.
And these are images of the U.S. Ag Secretary, who seems to be, again, pointing to the golden age. What do you think, Mo? Will it take time?
Unfortunately, I think farmers are going to go broke waiting for this golden age. The commodity market, corn, beans, tend to go through that boom and bust cycle. And again, what you're hoping for, unfortunately, is some sort of drought or some sort of Chinese trade deal that sparks demand. So, I think the USDA with the, if the disease is so bad and dryness is so bad, could the USDA provide farmers with a gift next January? I think they could, just like this past January. And so, who knows? Maybe the production is down between 500 million to 1 billion. But remember, if you're down 1 billion bushels, because maybe the yield on corn's down 10 bushels, I know that's a shock, but that could happen. The USDA is going to adjust demand lower again and shave maybe 500 million off of that billion. But ending stocks at 1.8 could drop, and that means higher prices to ration demand.
Now on to some good news for farmers. So Canada, the Canadian government unveiled a $370 million biofuel production incentive. And as part of the total package, there are a series of new measures for specific industries and sectors most impacted by tariffs and trade disruptions. And they will also amend the clean fuel regulations to support the domestic biofuels industry. According to the Prime Minister, loans will increase to $500,000.
It's supportive short term, but at the end of the day, long term, you still need to resolve this dispute with with China. So, and then you got harvest pressure. So until we get past harvest, I think this may have provided some short-term relief, and we may hold the $600 level in canola, but we got to get past harvest before we can see meaningful upside correction.
And also, Mo, what are your thoughts on the E15 coming to California for the first time?
Well, this is good news short term. Finally, after 15 years, California approves it. But long term, we need approval year round everywhere. And so until that happens, this is a nice positive announcement, headline news. But we
More
need
good news, I guess.
Yeah, we need more of it.
And all of that biofuel optimism is supporting the oil seeds, and the technical chart for soy oil continues to be on that upward sloping uptrend, although it's testing the lows of that uptrend. What are your thoughts, Mo?
Yeah, so we finally filled the gap from that June spike because of the announcement of higher blending mandates, biofuel blending mandates for 2026. And remember what we've said. Look, when you start a bull market, there's a lot of ups and downs. We traded to the upper end of that uptrend. We peaked. The funds took their profits. They then started shorting it. Now they're pretty close to probably ending this correction lower. They'll take their profits, resume the uptrend. Now that we filled that gap, we can go higher. It's going to take time. Remember, this is a 2026 story, so I would not be surprised if we break above 57 by year end. And so short term, if we start to climb back up, it'll be supportive both canola and soybean futures.
Let's finish off with the latest as far as the CFTC is concerned. Fresh off the press, the latest numbers from CFTC, which is as of September the 2nd, show that managed money funds did more selling in almost all the grains except for corn. So corn is currently, or rather the managed money funds are net short about 91,487. On the soybean side, again, they reduced their net length to 11,964. Chicago wheat is minus 81,943, and canola the net length continues to shrink to 20,160.
In real time, I think the funds are with new lows in wheat to close out the week. I think they're really short wheat. They've probably added to their short positions. Maybe the funds have reduced their corn short positions a little bit after this week's closings. Maybe flat soybeans, canola probably flat after this week's correction as well. So, again, as we said earlier, I think the lows are in for most of these crops, but not convinced just yet because we got to get past the month of September. We also got to get past the USDA September crop report. So we're close. I think the corn low in mid-August will hold. I'm not sure about the soybeans because of that export risk. Wheat could still trade lower if we break $5. Canola needs to hold 600. Until next week, thanks for watching. Really appreciate it. Don't forget to subscribe to our channel. Take care, everybody.
Bye, guys.